Maverick traders and Maverick currency traders. I cannot believe it, but half of the year is done. We just closed up June. We'll do the accounting on Monday. We'll do payouts on Tuesday, level advancements on Wednesday. But I just can't believe half of the year is already gone. So great job, everybody. But remember, the market doesn't care what you did in the past. It cares what you do in the future. Stay disciplined. Let's jump into it. In this session, we're going to go through the week, some of the news. We're going to take a look at everything with a brand new set of eyes. We're going to forget everything we thought last week and look at the charts and look at the information in front of us. And we're going to score everything from +3 to -3. And that's going to tell us where to be long and where to be short.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Let's talk first about the equity market, because the equity market was generally slightly bullish this week. But I want to be just totally frank, and if you listen to my video on Wednesday, I talked about this is not a good trading week. I said, hey, look, the best thing you can do is make no trades, and if you're going to make some trades, be very, very selective. We had low volatility, and I talked about how, look, on Friday we were going to get the US PCE report, and if anything could break us out, it was that. And we're going to take a look at the chart here in a second, but you'll see we broke out in the morning and we failed spectacularly, which tells me the market doesn't have energy for a run here. So we are in the middle of summer. It's likely summer trading. Again, everything just gets a little compressed as far as volatility goes. The dollar, same thing, tried to break out as well. It failed as well. Look, everything is just not ready to go at this point. Cryptos, we talked about how they've been in this high base for the last, let's call it 2 to 3 months. And we said, look, at the bottom of the base, it's got to bounce at the bottom of the base, and it didn't. It failed pretty bad. So, look, crypto doesn't look good. Equities don't look good. Nothing looks great here. This is where you pull back your trading activity and you trade less and become very selective. Let's take a look at last week's actual numbers now the week is in the bag. So as you can see here, we had mildly positive equities. So just mildly positive. Crypto slipped a bit. I mean, take a look at gold, basically flat for the week. Oil a little bit up. I think you can categorize this week as mildly bullish, but that's about it. I want to really focus on this S&P chart because the big question was, were we having a pullback? Were we having a pullback to this level, and then were we going to base or were we going to break out and run? Well, guess what? I think we got our answer today, and it was very clear. The market does not have the energy to run at this point. Look at that candle. This is a big failure. Look, all it means is it's not ready to run. I don't want anyone to be like, oh my gosh, that's the top. We're going to see this huge sell-off here. Very unlikely to happen. We're just very likely to just stay in this range. Just stay in this range. Now, the thing that typically pushes things out of a base is a 20-period moving average. I think this 20-period moving average has got to move up. I think we'll probably just trade in here. Once that moving average pushes it up, the next move is likely higher. This is not good for volatility. Again, for volatility, we want trends. We want clear activity. We want either people so excited they can't wait to get in or so scared that they're piling out. That's not where we are right now. So we have a saying at Maverick, trade the market in front of you. The market in front of us is not great. It's sideways to slightly bullish. That's it. If we take a look at currencies, if you listen to my video on Wednesday, I said this is not a great week, and I pointed out how low the numbers were. These numbers aren't great. Look at these numbers here. We're talking things were up 0.1, 0.2%, down 0.1, 0.2%. There was really only a few trades, and that was Aussie to the long side and yen and Swiss franc to the downside. That was really it. If you weren't hunting there, it was a pretty frustrating, slow week for you there. Now, last week we talked about we liked yen short, we liked Swiss franc short, we liked Aussie short, and we liked Aussie long, and we liked dollar long. As you can see, the dollar tried to break out, it failed. Aussie looked great. So if you were hunting in the right places, you made some pips this week. This is where it's so important in these kind of markets that you really find what's moving and you totally ignore what's not moving. Coming over here to crypto, same thing here. Look, I know that when you compare it to other asset classes, you just say, oh, wow, it was up 1.5%, down 1%. Do you know how insignificantly tiny that is for crypto moves? So basically, Bitcoin weakened a bit, down 4%. Everything else was flat. All of the proof is in front of you that says volatility is low right now. We're in the middle of summer. That's just where we are. Trade the market in front of you. Let's take a look at the bond market. So the bond market has crept back up a little bit. Not a big deal whatsoever. So we're up to 4.34. Ankit, I know you trade bonds a lot. What's your call here on interest rates?
Hey, Rob. Well, on the interest rate, I must say that things have been more on the quiet front. We haven't really seen a lot of activity, but there's definitely not a whole lot of expectation here. I mean, the U.S. data, is kind of mixed right now. There's some so like to the data today was better than expected, where some of the other data is kind of mixed. So I think this is very much data dependent here, but this is sideways price action. This not a whole lot happening. I think the expectation is not. It's more in line with everything is moving in line with expectation as far as the interest rate goes. So I think that's really where we are at. We are not falling apart in the interest rates, but at the same time, we're not rising rapidly, which is again giving us that whole outlook of a stable sort of environment in the markets.
And I agree. I think we are stuck between 4.2 and 4.4. We might poke up above it or below it, but I think that's where the market is at the moment. Let's jump over here to our crypto basket. This is the 4 cryptos we trade, equally weighted. And I really want to point out that we are right on the edge of the cliff. We should have had a good bounce right at this line, and it really pierced below it. It did recover, and it's trying, and it's trying, and it's trying. But look, remember, when things bounce, we want a V bottom. If you take a look back over here, that's a bounce. That's a bounce. This is really choppy. One day up, one day down, one day up, one day down. It is definitely not showing that everyone is rushing back into crypto. It's showing that it's mixed at best. That is not what you like to see at support levels as far as candles go for a bounce. Let's take a look at the schedule for next week. All right, we do have some elections. Now, elections are a funny thing in the currency world. For the most part, they don't matter until they matter. Now, let's talk about when they matter. When there's a surprise. Remember, everything is priced right now based on the world's best expectations of what is likely to happen in the future. This is called efficient market theory, where basically everything that we currently know today is priced into things today and the expectations of the future. So if the expectations of the future come true, just as Ankit said, there's really no movement to happen because everyone's already placed their bets based on that expectation. It's only when expectations are wildly different that you get the crazy big moves. So when elections come through, as long as the elections come through and whoever is expected to win wins, there is no volatility. However, when there is an upset, there are big moves, and we saw this, I want to say about 2 years ago with the New Zealand dollar. There was a big upset, and the Kiwi moved substantially for about a month after that election. So something to keep in mind, but it's not something that you should lose any sleep over whatsoever. All right, we are in the first week of the month, which tells us we get ISM in the U.S., ISM and ISM services in the U.S. Monday and Wednesday. We also are hearing from Chairman Powell, and we are also getting the job openings. So a lot of information in U.S. pretty much only. And then on Friday First Friday of the month, we get US and Canadian employment reports. I personally don't think the US report is all that important. I think the Canadian report is going to be a better report to trade. What do you think about that premise, Ankit?
So far, if we just study the price action, Canadian dollar has actually done much better compared to the US dollar here. So I think just like your last week call was spot on. The CAD is doing better, and I think maybe we can see a little bit more outperformance. Even on the oil front, the oil is actually doing really well right now as we are in this peak summer season. So I think we have this maybe a period where CAD probably do a little outperform the US dollar here.
Yeah, so on Friday, I'm going to be probably watching the CAD more than the US dollar, which is quite rare for me on those employment Fridays. So look, there's not a whole lot going on this week. Yes, we do have some US news, so US dollar is likely to be the most sensitive to it. We don't have any central banks. Powell does speak on Tuesday. And we also have a holiday, a US holiday, where equity markets and bond markets are closed on Thursday for the July 4th holiday. Look, everything about this week is telling me trade less, not more. I'm giving you that advice as well. I think you want to be very, very selective this week. If you are on vacation and you're saying, oh man, I wish I was trading, guess what? Enjoy your vacation. I think you're in the right place. Markets are cyclical. Volatility is cyclical. Some weeks it's good, some weeks it's not. Learning how to adjust your trading activity based on volatility is a way that you can put an edge to the bottom line of your trading. So let's go and take a look at all the currencies one by one, and we'll score them +3 to -3, and that's going to tell us where to hunt this week. I'll go through cryptos here, and I'm going to go through it pretty quickly, but you're going to see there is not a whole lot going on in crypto. We are at the bottoms of the range, and this is not the kind of price action you want to see. This is low basing price action. When you have a sell-off and you come to a support level, you want to see a bounce. You want to see green candles that really get the momentum back. You do not want to see this. This is telling you it is most likely going lower. We come down, look at the velocity score. We got that big low base here. Look, there is just nothing really exciting happening here in crypto. And frankly, it's looking to me like a breakdown is more likely than any bounce higher. Coming over here to Bitcoin Cash, it is already broken. So it's already showing you some relative underperformance. So you don't want to be long this at all. Ethereum, which was really trying to hold this base. It broke down and it tried to hold another level and it broke down. You can see it's just stair-stepping down. This actually is showing some outperformance against all the others. So when crypto does come back around, I am going to be looking at Ethereum first. But right now, it's all on the downside. It's all moving lower. And you can see Litecoin already broke, showing underperformance. There is nothing going on in crypto that excites me to go long crypto. So I'm not even looking for any entries in crypto whatsoever. Ankas, find us something to do in Forex. But again, I shouldn't say find us something to do. We're going to make trades based on if the market gives us opportunities. But let's go find where the best place to hunt is this week.
Absolutely. Well, let's just begin and start to take a look at see if there's any change in the trend score. That's the first thing I'm looking at. And we don't have a whole lot of change. Here we take a look at dollar. I really like dollar on the upside this week. And overall, the prices has sort of broken out, but we did stall right at the resistance. So again, very similar to what we saw in the equity markets today. We saw a breakout and then just a pullback. We're seeing the same thing in the USD. So it's not really overly bullish. It's mildly bullish. I won't be surprised if it falls back down. I mean, right now it's back in the range. So Monday is important if this will recover or it continues to extend lower. So I think we are right at the crossroad of this little breakout or back of the range. So don't really love the dollar price action here. That's why I think you have to be very cautious about trading the dollar because one day it does look bullish and the other day it just starts to look bearish. But that's just what we get in a sideways price action. And look at those moving averages. They're flatlining. Whenever you see moving average flatline, that's when you know that you're not dealing with a trend, but you're dealing with support resistance level. So that's really where we are at. Don't love the price action. We are +2 and a -2 on trend velocity. It's a zero for me. Now, there's better price actions out there. And looking at the USD, the Japanese yen, well, this thing is continues to fall apart. We print fresh 38-year high like in the USD yen just this week. So despite our dollar being mixed, the dollar yen kept pushing higher. So those are the best pairings. But if you take a look at yen overall, this thing has no hope whatsoever. -3 on the trend and -2 on velocity. So looking for a short, this one goes on the top of the list. Now, after the yen is the Swiss franc that I like the short here. Again, remember they cut the rates. They have gone for two rate cuts now, and now this thing is slowly chipping away. It's nothing too volatile, but you can see that we had a big rally for 3 weeks. Late May till early June. And that thing, I wouldn't be surprised if it start to kind of give away some of those gains. So we are already below that 20 moving average. I still like this as a short. But again, as you can see, this thing is not extremely bearish as the Japanese yen is. So this is something that gradually would likely come lower, maybe some pauses in between. So Swiss franc again goes in the list as a weaker currency, as we are seeing a weakness in that trend score. Now, on the other hand, the euro actually has been kind of going back and forth. And take a look at it now. We have a little improvement in the trend score. We are at a -1 now. Again, in no shape or form, this looks like a best currency to buy. But again, in comparison to the Swiss franc, we definitely have that divergence here again. Once again, we have this divergence. So I think it makes it worthwhile to even take a look at euro Swiss franc currency pair. But don't really love the euro as a long. I think I just have a better short with Swiss franc. Now, the British pound is another one that, I would say that this thing had its own run as well. And now it's just going sideways. So again, I get this question a lot. What do you think of the pound here? Well, I'm mixed. Like I don't love it as a long, and I don't love it as a short. So I think like I said earlier, there's better shorts and better longs out there. This is neither of them. So that's really where we are with the European currencies. And now let's focus on what's moving, and that's the growth currencies. Take a look at the CAD. So we talked about CAD last week and say, hey, this is a nice little high base pattern. We like this more to the upside. And look, guess what? Even though we're getting a lot of wicks, it's still moving higher. We are above the 20, above the 50, and we had a surprise increase in that inflation data out of Canada, which again now puts Bank of Canada back in the line here saying, hey, let's not cut rates again next month. So again, everything runs on expectations. So realize that's really where we are with the Canadian dollar, and beautiful high base forming on this velocity chart. So I still like this on the upside, maybe a little bit on a higher time frame. Now, Aussie is the one that's really catching the heat here onto the upside. And again, we see this turns back and forth in Aussie and Kiwi, and right now Aussie is the one. I've got a breakout. You can see after the breakout, it continues to running higher. So there's a clear outperformance in the Aussie on the currency basket. So this is where it makes a great sort of setups in Aussie yen, Aussie Swiss franc. Again, those are the currencies that are really moving well here. And then lastly, the Kiwi, which again, not the one that's really moving. So Kiwi goes on the list as an underperformer. You can see the trend is a zero and the velocity is zero. Well, there's no point trading something that's a zero. You want to be trading something that's moving. And this is where I would want to bring the point, as Rob said earlier, be selective. And that's really all about. This is all about being selective, is that we don't want to trade every currency. We want to trade currencies that are actually moving. So I think being selective really pays off in this environment where, you want to be focusing on those individual currencies rather than across the board. Some currencies might not be moving, and that's really not where we want to be putting our focus on. Back to you, Rob.
And that is just such wise words, because one of the biggest mistakes that a young currency trader will make is they look at the market, there's activity, there's movement, there's candles moving, and they think, oh, there's movement, so there must be a good trade. That is absolutely not true. In the currency market especially, even more than equities, there's a whole lot of randomness. There's a whole lot of random periods where you literally cannot get an edge because there's no edge to get. because it's truly just random movements. We need to like get into stuff that's like, okay, this is a high base breakout that has a 62% chance of doing X. And that's only within like a really strong trend. When there's no real trends, you really, really have to be cautious, because this is where a lot of traders do great when there's trends, and then they keep trading actively when there's no trends and they chop up their account. It's just death by 1,000 cuts. And then once they finally get a trending market again, they're back to where they started, or they even are in a loss. Take my advice. Only trade when there's good trades. It's not setting up for a great trade. Look, yes, dollar looks okay. CAD looks okay. Aussie looks good. I mean, if this was any other week than this, I'd be like, hey, Aussie's a no-brainer. Let's jump on Aussie. Now it's like, okay, let's be very selective. I am specifically looking this week to enter dollar, CAD, and Aussie only on pullbacks. So I'm really going to be watching that, because right now they're not running. They're not running, and I don't want to get in at the top of a wick. I want to get in at the bottom of a wick. It's very, very crucial to get in at the bottom of the wicks if you don't have a lot of energy, because you don't get chopped out, you don't get stopped out. All right. Obviously, the focus is going to be Aussie is number one, yen is number one on the short side, Swiss franc number two on the short side, and probably CAD number two on the long side. So that's telling us, hey, this is where you go hunt. Ignore everything else. Ignore the pound. Ignore the euro. Ignore the Kiwi. It's not doing anything. Focus on the right places. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? First up is Aussie yen. What I just said is I'm looking to get in off of pullbacks. Let's take a look at like today's candle. I want to get in at the bottom of wicks. I want to get in the bottom of wicks. I don't want to be getting in up here and then having a pullback. I get stopped out for a loss in a slow-moving pair. Again, look at this candle right here. I want to get in on the wick. I want to get on the bottom of the wicks. I'm really focused this week on pullbacks. I'm not going to look for a lot of bases. I'm usually more bases than pullbacks, but this week specifically, I'm looking to get in on bottom of wicks. I just want to jump over to dollar yen as well and just really take a look at where we've seen price action lately. Bottoms of wicks, bottoms of wicks. That's where we want to get in. But you're safer. You're much safer down here off of pullbacks than trying to buy base than buy breakouts, and then you get pullbacks. So really, really focus on that this week. And so when we take a look at our currency pairs, we're not at pullbacks at this point. So here's a 4-hour chart on Aussie yen. You know what? I'm not interested on this. I want to get in on pullbacks. Pullbacks here, that big red candle there. That's a great 4-hour candle to then start looking at a shorter time frame. All right, we got a decent high base breakout here. We got a decent high base breakout here. But look, I'm really looking for like a candle like this. I am licking my chops to get in because that's a great entry point in this kind of market. So we just reached a new high up here. You know, I want to let this come down. Look at this red candle we're getting. I love this red candle. Bring me down into this 107 area and give me a little pierce below that. I would love to see 107 and then it pierces down to like 106.60 and then it bounces back up, and that would be just a perfect scenario for an entry here. So Aussie Swiss franc, I like that quite a bit. Sorry, Aussie yen. I'm going to take a look at CAD Swiss franc. but you also can take a look at CAD versus the yen as well. And it's going to be the same story. I want to get in on pullbacks of some short-term stuff. So taking a look at a 4-hour chart, anytime I get a big red candle on that 4-hour chart, I'm going to start looking. I mean, even here, it wasn't a great entry point here. So let's say we take this candle, these candles right here, and let's say that you got in off this candle. It wasn't a great entry point, but guess what? You didn't get stopped out. You know, it went in a 10 pip range for basically 2 to 3 days. And then it worked for you. You don't get stopped out. But if you, let's say you grabbed it up here, all of a sudden that pullback's too deep and you likely get stopped out for a loss. Oh, I like pullbacks. I like big red candles. That's going to tell me to start looking for an entry. Anka, what do you like here?
Well, I think we are on the same lines here as far as our currency pick goes. I really like Swiss franc. Again, I liked this last week when we discussed this. It was a setup that I really like off that high base on that daily chart. Well, right up that resistance, you can see that this continues moving higher. And I think at this point, it's likely to slowly creep higher up to that 50-day moving average. So again, like this on the long side, along with the Swiss franc. That's another one that looks nice on high time frames. Again, I like this, how we are above those moving averages. And now we can slowly start to, have a stair stepping higher. You can see how those price action is pretty much one way. So it's just a matter of getting in and just riding that move. I think that's really where we are at. Going to next week for the USD, I will be more active around these events. I think dollar is a great currency right now, just on these events. I don't like it overall, holding on a day-to-day basis because there's no trend. But still, you get a lot of those intraday movements, which I think we'll get with some of the news events next week, like the employment report and even some of the economic data like the ISM numbers. So that's the game plan. Looking to trade that and looking to trade, some of these currencies on the upside as the Swiss franc goes lower.
Wrapping this up, be cautious this week. More trades is not the answer. Less trades is likely the answer. Be really, really focused on the entry points. Get really good entry points, and then you can sit out the low volatility. But if you're chasing things, if you're going after things after they've already gone, I think you're in some trouble here. So buy on some weakness or short on some strength. That's what you want to be doing here, and do less, not more trading. Thanks for joining us, everyone. Have a great weekend. Goodbye.